FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz, and today's 9/25/18. Well, bond yields are up. Fed's threatening to raise and keep raising till kingdom come. What is that going to do for the emerging currencies, the emerging economies? How deadly is it? What about precious metals? Well, we'll get to all of that and lots more. First, be a part of the show. Email us, kl@kerrylutz.com. Anything you want to discuss along the lines of the show or anything else for that matter. Hey, well, Nick Santiago, inthemoneystocks.com, is with us now, and we got rates going up. We got all this stuff happening. Nick, what are we going to do? First, welcome back.
Hey, Kerry, thank you for having me again, and I'm not sure what we're going to do. We're going to trade it. That's what we're going to do.
We're going to trade it.
Money out of it.
When in doubt, trade it, right?
That's it. That's what I do, and I think that's what everybody should do, including the world.
Yeah. Well, then what would happen? Everybody would be trading, and nobody would be making widgets anymore.
That's right. But you know what? We'd have a lot of peace in the world, and maybe that would be a good thing for a change.
Yeah. Well, hey, if you trade, you know, when you're glued to your screen, it's hard to be showing up for basic training and killing the enemy and all that stuff. But when you are trading, there is an enemy, isn't there?
There is. There's a winner and there's a loser. And that's what makes a market. So, you know, in any case, when you do trade, though, if you're a country and you're trading with somebody, there's always going to be a trade imbalance. There's always going to be things along those lines. But when you do come to an agreement and you do have some prosperity developing and your country and your nation can create goods and things along those lines, you're going to have a better society as a whole. So that's what we hope to basically accomplish.
Yeah, so the markets have been upset, I think ridiculously so. It's an intermediate trend at worst of the so-called trade war taking place between the U.S. and China. First of all, is it really a trade war?
It's really not a trade war, but what I think this whole thing is about really is intellectual property, and that really is a problem. So, you know, I think this is the first president that really has ever taken a hard stand to even resolve it, and you know, we'll see if he can win it. I happen to think he will win it. I'm just looking at the Chinese stock market, the Shanghai Composite. I have it penciled in to go down to around sub 2,500 right now. It's at around 2,781. So when we see the Shanghai get to around 2,500, you're going to start to see the white flag being raised by China, and they're going to come to some kind of a kumbaya moment with President Trump and his administration, and then we'll have some kind of trade deal worked out. But I do think there's still more skirmish to go. There's still more words that will be spoken on both sides, but the reality of it is both countries really depend on each other. China is no longer the country it was 20 years ago. They're now the world's second largest economy, and one day they probably will be the world's largest economy. So there's certainly this is time for them to step up and, you know, put their big boy pants on and you know, act like a world's second largest economy.
Yeah, no more of this. Hey, when I was in Shanghai, I don't know if I ever told you this story, but my friend Mike, he was running the trip, and we go to this mall, and it's like he knocks on a door. It's like a wall. It's got shelves on it with like products on the shelves. He knocks on the wall, and a hidden door opens up, and we're led into this like room. It really made me feel claustrophobic. I had to get the hell out of it. But it was about 200 square feet chock filled with every major designer knockoff that you could ever imagine. Louis Vuitton, you know, you name it, Gucci, anything that you could think of, Marc Jacobs, whatever, Prada, everything. And those knockoffs were really good because I'm pretty good at detecting knockoffs and, you know, sloppy stitching, whatever, inferior metal. These things were damn near perfect. I only bought a couple of passport holders because I just don't like the idea of knockoffs. But what was interesting is that this thing is underground now. Like the watch knockoff market in this town where we were staying. You had to go there 11 o'clock on a sidewalk in some isolated part of the city, and you could buy, knockoff Rolexes that were really good, I have to say. They were really, they went for 200 instead of 50. They were that good.
Right.
So they're making an effort, but the whole systematic misappropriation of intellectual property, both of the U.S. and the rest of the world, Europe as well, Germany, it's got to stop.
Yeah, it has to stop, and I think we're getting closer to that happening. I mean, China at one stage of the game here has really dominated the black market for the most part, and how it's time to grow up and become the next if you're going to be a world power and a world economic power, you got to cut that out. And it's not even so much with the textiles, but it's also with the computers and all of this intellectual property. I mean, you got companies like Micron Technology; they've been getting ripped off for years, and so many others. So it really is about intellectual property. And I think all this tariff stuff that you hear about, and all this stuff going on with the farmers, and all of this, just these tariffs that get slapped on goods almost every other day. The reality of it is this is truly about intellectual property, and that has to stop. And I think it's going to stop. At least it's going to get much, much better than what it has been.
Hey, and Trump, they made an unforced error. Well, maybe it was forced. You could argue they slapped the 25% tariff on soybeans without thinking that, without the U.S., there is no surplus soybean crop for them to acquire. They're stuck doing business with the U.S.
Yes. So you're going to, as we all know, soybean is a huge, huge product in Asia, and again, we'll see how that plays out. But I think there's a little bit more to that story. I don't think it's really the politics on both sides are pretty intriguing when it all unfolds. So we'll see how this all plays out. But again, just to sum it up, I really believe that this will be, by election time, this will be all settled out. Maybe it goes past the elections, but there'll be some kind of a handshake deal in place by then. And
so stock market, bond market, oil, currencies, where are we headed now?
Well, the stock market, for the most part, is what we call chop suey. You have things like the Dow that have just recently broken out to new highs, and then the last couple of days, stalling out a little bit yesterday with a nice little sell-off. But in all, what I should say is that certain markets are under pressure, other markets are booming. But the reality of it is this: when you have a country with a 21% corporate tax rate, there's going to be business going on there, and that's really what it all comes down to. And I know a lot of people don't look at this, but the small cap companies in the United States are pulling back a little bit now. But this is what should happen after the big run that they've had. This is natural. This is a good-looking chart. And this is a chart, in my opinion, that goes even higher in 2019, which is the Russell 2000, which represents the small cap companies in the United States. Just think about it. They have a 21% corporate tax rate, and the dollar is pretty strong, where they can buy goods abroad much more than they could just a couple years ago. So this is just a win-win. I honestly have a hard time getting very bearish. I would love to see a real hard sell-off or a correction of some sort, but it's hard to see that right now because the market just remains resilient when you have a 21% corporate tax rate, and businesses are going to come to the United States and they're going to want to be based here. And that's really what's happening. That's why you see the markets behaving the way they are. Markets are always a leading forecast of what's coming, and these markets are still very, very strong right now.
Hey, so Nick, we got to take a break. We've got a sponsor, Blinkist, and if you don't have enough time to read all those books that you've always wanted to read, Blinkist is the answer. Nick, you and I share this in common. We love to read, but we just can't find the time anymore to do it because we're such busy people, like most of you out there. And the list of books you want to read are those that your friends, family suggest you read. It's just never ending. It's always expanding. You simply don't have the time to read them all. Our sponsor, Blinkist, has solved your long list of must-reads once and for all. Blinkist is the only app that takes thousands of the best-selling nonfiction books and distills them down to their most impactful elements so you can read or listen to them in under 15 minutes, all on your phone. With Blinkist, you'll expand your knowledge and learn more in just 15 minutes than you can in almost any other way. Plus, you can listen anywhere. I like to listen to Blinkist when I'm on the treadmill at the gym. The Blinkist library is massive. Timeless classics like The 7 Habits of Highly Effective People to current bestsellers on Amazon such as Sapiens. Whatever you're into, you can find it at Blinkist. My personal recommendation, a book that I've really loved over the years, is the 80-20 Principle. Highly recommended. And Blinkist is constantly curating and adding new titles from the best of list, so you're always getting the most powerful ideas in a made-for-mobile format. 5 million people are using Blinkist to expand their minds 15 minutes at a time. Get started today. And right now, for a limited time, Blinkist has a special offer just for FSN community members. Go to Blinkist.com/FSN and start your free 7-day trial now. That's Blinkist, BLINKIST.com/FSN to start your free 7-day trial. Best of all, you can cancel at any time. Just go to Blinkist.com/FSN. So picking up where we left off, Nick, market, like you said, chop suey, but probably going to go higher because business, 21% tax rate, and that's really for big corporations, mind you. But nonetheless, most of the business taking place in the country is from big businesses. But we haven't seen loan demand from banks really take off yet, have we?
No, we haven't. We haven't seen that, but that will come. That will come. Give it some time, and that will happen. I mean, you just had a lot of capital come back into the country through repatriation, and this is going to take some time. You got a lot of share buybacks going on with big publicly traded companies. That will still continue, and then these companies will start putting money to work. And again, it's just a very, very strong mixture of different things that are happening. That are still very, very positive. So, I know every day you hear people get so negative, the market, and, the reality of it is markets don't peak when people are so negative. They peak when everybody is optimistic. It was John Templeton that used to say markets peak on extreme optimism. We're not at any level of extreme optimism yet.
No, nobody could accuse this of being optimistic. And maybe the whole political situation is really helping the market and helping the economy because it's all negativity. Well, that the crumbs in the tax cut, well, the price of gas is up and it's using all that money for that. The whole thing, it's just kind of absurd, but you're starting to see wages creep up for sure. Supposedly there are labor shortages in various industries. Certainly in manufacturing, we know this to be a fact. And there's more help wanted ads than there are people looking for jobs or in the unemployment rate. Absolutely.
In fact, I always tell the story. I have a boat, and I always, the boat is fairly new, and I had to go in and get this 100-hour service. So I called the dealer up, and I said, hey, can I get the boat serviced? And he says, Nick, I can't, and this was months ago, I can't service it until October. And I said, I mean, that's the best you could do. I'm way over in the hours. I need this boat serviced. He's like, I am booming. I am swamped with work. I can't get there until then. I mean, and you're seeing that all over the place. So,
yeah.
I know people in a lot of small businesses right now, they haven't seen times like this in 25, 30 years. So it's pretty incredible. And, we'll take what we can get. I'm not saying this is going to be an economy that has a 5% GDP, but, we're probably at, low fours, and that's a lot better than where we were stuck at 2 for the last, 10 years. So I think it's pretty good to see. And, again, I think we have some more upside in the bigger picture. In the near picture, we'll get more choppiness. That's okay. But, markets hate uncertainty. And right now you got the trade wars going on, predominantly with China. You do have the NAFTA deal that's not settled with the U.S. and Canada, but there's supposedly a deal in place with Mexico. So we'll see how that plays out. And then you have, the Europeans, which, they're kind of their own. What can you say? Brussels runs things a little bit differently.
Yes, they
I'm not
do.
a big fan, but, we'll see how that plays out. But that's a catastrophe waiting to happen one day. So that even shows you why more money will come into the United States.
Yeah, well, eventually the euro is going to go bust. I don't think there's any question about that. And that'll probably give the U.S. dollar added life down the road. But hey, what about oil? We're up to $80 now. Is it going to?
No, oil right now today, WTI is 72. At 72. Brent crude is above 80, but West Texas is around WTI. $72, and it's still holding up very well. So there's no real problem with crude. The thing is, when people talk about crude breaking out to 100, I don't see that. I think there's just way too much oil in the world right now. In fact, the highest I could see crude going would be $79 to $80. When it gets there, I will be selling it short. So, I'm waiting for crude to go up to that level. That's a level where I will personally be selling short the oil markets. But, it still has wiggle room to get up there. So nothing really wrong with the oil chart right now. Oil's holding up very, very well. And then you have situations that are going on in Iran and in the Middle East, and that stuff, continues to keep a bid in oil. But the reality of it is I don't see oil getting above $79, $80 on West Texas. And when it does get there, it's a shorting opportunity all day long.
All day long, huh? So precious metals, you think they still have another leg down, huh?
I do. When I look at the gold chart, and, I have not been bullish gold for a while, and, we've seen gold really go down until mid-August. And that, if you take a look at the chart, this is pretty neat because you'll see that gold put in a little bit of a bottom on August 16th. Now, when you take a look at the dollar, you'll see that the U.S. dollar index, put a little bit of a top in on August 15th, and that was on the Turkish lira crisis. So really what the dollar's been doing since then, it's been backing off, and that has been giving gold a chance to move up. But the reality of it is the dollar is just consolidating to go higher, and that will cause gold to have one more move. But I don't see gold going below 1145, 1140. I think that's going to be the floor, and I will start to be a buyer around that area.
So 1145 or so, that's what we have to look forward to. And silver, what's silver going to do? Then it's going to get hit even worse, huh?
Well, silver should trade with gold since, basically it is the stepchild. So when you look at gold, I guess the parity is 60 to 1, but right now, the way I would look at it, when gold puts in its bottom, that's when you jump in on silver. And it's just a cheaper way to play the precious metals.
Right. Okay. Interesting. Really interesting. And what about the Fang stocks? They have been the leaders to some extent, although the past couple of months we've seen the NASDAQ and the Russell 2000 really kind of take control, but the Fangs really has been where the action is at. Is that going to continue to be the case, or are they going to fade?
Well, they've already faded. I mean, you could take a stock like Google, which is now called Alphabet, but that topped out in July, late July. That was, trading around 1289, 1290 level. Today it's at 1191, and I think that can still pull back further. You have stocks like Facebook. Facebook in late July 25th was trading at $218. It's now $160. So the Fang stocks have really cratered. Not so much Apple or Amazon. They still are pretty much holding trend, and the charts still look pretty good on both of them. But when you take a look at Google, you take a look at Netflix, you take a look at Facebook, I mean, these stocks have already come in off the highs in a big, big way. So I would be careful with those three right now if you want to trade Fang. But the reality of it is there's more. What you're seeing really, and I don't want to jump ahead, but what you see really is a lot of money rotation. So money was really in the Fang stocks for the first half of 2018.
Then once we got to July, money started to slip out at least 3 of the 5 fangs, and now you're starting to see money go elsewhere. You're starting to see financials last week get a bid. They've been a laggard recently. So you're just seeing a lot of rotation, and even a lot of retailers are very, very strong right now. And, a year ago, they were very, very weak. So we're just constantly seeing money rotate out of one industry group, get into another industry group, and that just is, continuing. And that's why the major indexes here in the U.S., they don't really fall much. You don't, you don't have a 10, 15% correction. You just get these little 2% pullbacks, and they kind of go back up because that money just gets removed from one area and put into another area. And we constantly have seen that throughout 2018.
Yeah, that's an interesting point that you're raising, that the money isn't really going anywhere. It's staying there. It's just kind of being moved around effectively.
That's exactly right.
Interesting. Well, I guess you got to go over to check out Nick's site, inthemoneystocks.com. Nick, just tell us what you're offering these days.
Yeah, we always offer a 7-day free trial to our intraday stock chat room. That's predominantly for day traders, but you can come on over, also get a 7-day free trial to our research center. That's where we are swing traders in there, holding stocks from one day, sometimes to even a month or two. And again, we get all of our content each and every night. You get our market updates. You get all of our trade alerts. Everything is in there. It's a terrific product. We're having a great, great year in 2018. And check it out. Take that 7-day free trial, or just come on over to the blog and read some of the posts that we put up there. Plenty of free content for everybody to view.
Excellent. Hey, if you've got a question for Nick, myself, be a part of the show, send us an email to kl@kerrylutz.com, Twitter feed @KerryLutz, and the Facebook page is Financial Survival Network. Nick, we'll catch up with you next month. Thanks for the heads up.
You're welcome, Kerry. Great to be back, and we'll talk to you soon. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.